Happy morning. In this video, we are going to see the meaning of share capital and kinds of share capital and then various forms of capital. Yes, here is the meaning of share capital. It refers to the amount of capital raised by way of issue of shares by the company. Share capital is the money a company raised by issuing common or preferred stock. The amount of share capital or equity financing a company has can change over time with additional public offering. There are two different kinds of share capital. One is preference share capital and another one is equity share capital. Here we have the meaning of preference share capital and equity share capital. Preference share capital is the funds generated by a company through issuing preference shares. Preference shareholders have the first right to receive dividends even before equity shareholders. They are also part of owner of the company, but they do not get any voting right to select its management. Equity share capital is the fund generated by a company through issuing equity shares. It consists of company shares that the owner decide to sell to individual investor and institution in the stock market. The equity shareholders become stakeholder in the organization and these investors are eligible for both ownership and voting right in the company to select their management. Now here we have different forms of capital. Authorized capital, issued capital, subscribed capital, called up capital, uncalled capital, paid up capital and reserve capital. Whereas authorized capital is the maximum worth of shares a company can issue and paid up capital is the actual worth of shares a company received. Authorized capital is mentioned in Memorandum of Association and paid up capital is mentioned in the balance sheet of the company. Called up share capital refers to the portion of the company's share capital that exists as shares for which the company and the shareholder have a definite agreement as to the value of those shares. And the term uncalled capital is that part of subscribed capital which is not called up till now but can be called up in future as per the needs of the company. Capital is that part of the issued capital that is actually subscribed by the public. The issued capital and subscribed capital become equal when the share issued for public subscription are subscribed fully by the public. Finally, reserve capital is that part of the authorized capital which is yet to be called up and will be available for drawing when needed. Yes, I hope now you will get good idea on the topic share capital. Thank you.